Markets have rebounded from yesterday's sell-off on news that Turkey is doubling down on tariffs against the U.S., but are we out of the woods yet? Joining me today is John Doody. He's the founder of Gold Stock Analyst and joins me now from Florida. John, good to see you again.
Hi, glad to be with you, Danny.
So, when markets are down, who are you going to call? John Doody. Markets breathing a sigh of relief here. Stocks are up and so is gold, but can this bounce last?
Yeah, well, the market's being down every market is down this year except for dollar-denominated assets. The U.S. dollar is up, U.S. markets are up, U.S. real estate is up, but foreign assets are all down. There's a fear in the foreign markets, particularly of late with the emerging markets, Turkey, Brazil's down to 3.9 real to a dollar now, and China could blow up at any point in time because there's so much debt, and the safe place to be is in dollar-denominated assets. And while gold is a dollar-denominated asset, it's not really a dollar asset. It's an alternative to dollars. And all of the near money types, gold, silver, and Bitcoin are all down this year. When is it going to turn around? Well, I think soon, because nothing goes forever.
Right.
And the one ray of hope that I have is that the Commitment of Traders report from the CFTC, which is out every Tuesday, has net short money managers are net short the most ever. They're net short 15% of the open interest. They've never been net short more than 3% of the open interest. And the normal position in the CFTC is positive because of the contango, the gold's contango, where the future prices trade higher than the current prices. So to be going against a contango, to be net short, means that there's a lot of buying power to be released when something sparks it to the other direction. So what that's going to be, who knows, in this world of uncertainty, but it'll come, no question about it. And last time that we were the most short ever, which was minus 3% of the net open interest, gold and was up 40%, not 40%, 30% the next year, and the gold stocks were up 78%.
Well, let's talk about the gold stocks now and the silver stocks. You obviously have your list and you choose your top performing stocks. So how has the recent activity caused you to reevaluate your picks? Has it?
Not really. We want to hold companies that are not going to fare poorly in a lower gold environment. So that means royalty companies. I mean, they'll make less, but they're not going to go out of business. We like some of the developers that don't have any construction underway, but are in the permit process and so forth. So they're not. As long as they're cashed up now and they can run for the next 6 months or a year, then there's no issue with their safety. And the producers that we like, the small producers, they're all cashed up and going. So they make money at 1,200. They don't want to be at 1,200. Nobody does. But we want companies that have a all-in sustaining costs of below $1,000 an ounce, which implies a cash cost usually of $800 to $900 an ounce.
But let's look on the silver front. Silver really taking a beating here. Are the silver miners in trouble?
Yeah, maybe some. The silver we always think is gold on steroids. So it goes down further and goes up further than gold itself. But the big miners like Wheaton, for example, they're not a miner, but they're a royalty company. And the larger ones have the ability to raise money if necessary, and some of the smaller ones we like don't need to raise any money. So, as long as you're not needing to go to the market and sell shares at these prices, you're okay.
So is it a buying time for you, John? Is it time to go shopping for a lot of these miners right now?
Well, it's a good time to be building the list, and of course, we think we have a pretty good list. But it's a good time to be searching out for who do you want to buy and to be owning. I think, you don't have to put all your money in, but, whatever your final position is, you could be at least at 10 or 20% in. And if the market turns abruptly, you'll be invested, at or near the bottom. And if you're buying on stocks on the way up, that's usually a good position to be in.
John Doody, thanks so much for your thoughts.
Okay, good to talk to you.
And thank you for watching. We'll be back tomorrow.